Welcome to Nikos Blended Investing. So this last couple of months have been not very fun. The markets have been quite volatile and a lot of our picks have been damaged, especially the Chinese stocks and small caps. This past week has been very stressful. Pretty much every day we've seen large volatility, 1 or 2% movements in either direction. So the way we're sitting at the moment is perhaps around 25% cash, which is quite large for me. The past month or two, I've been sitting around between 5 and 10 to 15%. But the moment we're sitting with this cash, plus we have 3 large positions in some of the gold related instruments, so GLD, and we've got Barrick Gold and GDX and GDXJ, the junior miners, just as hedges against inflation, which the last couple of days have kind of held up our portfolio from some of the worst downtrends. So some investments we've done recently is the Tlt Etf, which is run by BlackRock, which tracks the performance of the US Treasury's 20-year bond. I feel like this is useful because it is, in a sense, a place of safety when we have large movements, scary movements in the market. Maybe it isn't the best thing to defend against inflation, but it's better than sometimes just holding cash because you do get some of the yields from the bond market. We tried to get into some Boxlight and IRO, but I exited them a little bit about a couple of weeks ago because I'm just the movements of Boxlight and IRO, they kind of scare me a little bit because they're very dependent on retail. I would like to pick up IRO and Boxlight pretty soon if they drop any lower, but I'm just wary of some of the falling knife type actions, some of these small caps. Although I like Boxlight as a company and IRO as a company as well for the last mile transportation. So in terms of performance, if I look at my chart, I'm sitting at 20% for the year, and on eToro it looks like 17% because we had that whole Hertz issue with the stats, where basically my Hertz positions were originally marked 100% loss. So that's why they look different. But if you don't believe me, then I can prove it to you. Basically looking at my homepage charts are showing 3.5% greater than what I'm performing at the moment. But on the stats, the last couple of months, November was -4%. This month it's about -2%. So challenging time for us. A lot of my new copiers are in the red, and I really hate to see my copiers with negative, equity. And I'm sitting around 6 to 10% copiers profitability. So that's quite difficult because this past 6 months have been difficult. We had a really, really good first start of the year when we made a lot of money on the small caps. But this year, the small caps after February have been dreadful. We've lost. The small caps have previously performed worse than the drawdowns in cryptocurrencies. So, statistically, basically, these November to December have been good for small caps. But it's not working out right now, so we'll see what happens. So we've got some value stocks and a lot of German value stocks and UK value stocks. We've got our largest position is BMW. That's my largest position because I own BMW car, and I've seen the prices that the services cost at the garages, and there's a lot of margin there. And I've looked at the X1, I've went to the showrooms, I've looked at some of the motorbikes and all types of cars, and BMW is really progressing the technology. The jump between the last version of the X5 and these new dashboard design language with the touch screens and all this kind of stuff, really impressive. So, today in BMW we've drawn down about 3%, which is hard to see, but I'm going to keep holding that BMW stock and probably get dividends in May if we hold it through then. In terms of our big pharma position, GSK, that is starting to pull back to its break-even point. We've actually made more money from GSK than we've lost in terms of the amounts on the eToro because the dividends have been greater than the drawdown in the stock price. This month we also got rid of Gazprom because I'm just worried about the whole situation with Russia. In hindsight, I kind of regret getting rid of it because that was giving us really good dividends, but sometimes I am still victim to some emotions, and when I saw some of the words that Putin was saying, it really kind of I just got out of it. So anyway, we got out of Gazprom at about a 30% profit, and Gazprom I think is down today a little bit. So, well, we got rid of Lufthansa Airlines because I just the way the whole thing's going with Omicron. Even though the Lufthansa, we've had a really big drawdown from its all-time highs and high peaks. I just feel like the travel industry right now is still bad news, and I've got enough exposure to Norwegian airlines to risk any more drawdown in Lufthansa Airlines, however you pronounce it. We also got rid of Wells Fargo. I feel like we've had a nice run with Wells Fargo. We made about 30% on that trade, and I'm just looking at the chart also, and it feels like it's a little bit weak. And well, yesterday Wells Fargo were up about 4%, so I was kind of kicking myself for that. And also we got rid of AT&T. I got a little bit impatient with that stock, losing like, I think it was 10 or 20%. And then yesterday they also had a big jump, so sometimes I can get a little bit impatient myself, but like I do get impatient with losses. We also got rid of quite a large position of our Greggs. I think Greggs has really benefited us over this past year, or year and a half. But the technicals on the chart, there's just been like almost 100% profit. I think one of the positions on Greggs. I'm not really sure how much room that has to grow. I'd like to get back into Greggs at a lower price. So that's what I'm thinking about that. I still love Greggs as a company. We dipped into ASOS and JD Wetherspoons. I think I was just watching a lot of popular investors that were talking about it, or one in particular. And I was down 10% on JD. I was down about 10% on ASOS. And I just got tired with it. It was quite large positions as well, but I just got rid of them because I just found that I didn't want to lose any more money on them, unfortunately. So, and also with the Omicron, JD Wetherspoons is not looking the best company to hold right now. ASOS, I think they're pretty much online only. So, and it's quite expensive for them to deliver and return items versus something like, Next, which you're able to, they have stores, and stores are more efficient because you can deliver in bulk there. So that's why I got out of ASOS as well. Today we bought Cineworld because I was wanting to get Cineworld at around 27 pence. Being a Scotsman, I like a bargain. But yesterday Cineworld, 2 days ago Cineworld dropped 40%. And then yesterday Cineworld jumped 10%. And then today it jumped another 5%. And then good old Nikos FOMO'd in today. And we bought Cineworld when it was 5% up. And we've actually ended up today in profit in Cineworld. It's finished today at about 8% up. So anyway, looking forward, we're sitting 25% cash. We've got a TLT position. We're holding some gold. I've had a couple of shorts in SQQ, but I always do really badly on shorting the market. So you should always do the inverse of when I short the market, because you'll probably make money of that. So I'm looking forward to next week. Basically, we're going to watch inflation. We're going to watch Omicron. We're going to try and get in some low positions on some of the stocks that we want to get back into, like Backbox, and IRO. And that's pretty much it. So it's pretty tough this time of year, but we're hoping to finish the year, 12%, 15% up, maybe even 20% up based on if we get a good run of the rest of December, okay? Well, thanks very much for your time, and we'll see you again soon on Nikos Blended Investing. Sorry if I'm really tired. I've just worked a full day doing software development. My eyes look really tired, and I've been playing the bass guitar at the church tonight. So this is about as much time as I have for a video. So no fancy editing, but I hope you liked it anyway. Bye-bye.